Hey, welcome back everybody, and happy Wednesday, and happy Wednesday early morning for you guys in the US, and it's early afternoon here in London. And today, as we've got some real main news to scalp. The PPI, which is coming up in about 10 minutes time or so. The main headline PPI is the one to watch, and the core one is obviously with all the bits stripped out. This is a precursor to tomorrow's inflation CPI. So this is a producer price index, which is obviously measuring price changes and obviously relates to inflation. So this is a, you know, again, it used to be really good. I always used to trade it. You didn't really get major big moves on it, but obviously now this is another, and same as tomorrow, anything that's data related to inflation, pricing, etc. moves the markets, as the markets are really jittery. And this is where, as true scalpers, we can take advantage of this. And like I said in my intro, we take advantage of things that other traders don't want to trade or ignore, and you're just missing out if you've got the strategy and the setup to do it, which we have. So we're on our axe trading setup. We've got our 5 minutes and our 1 minute. And at the moment US30 is just ranging. We'll take our line out in a second. Just put it there just so you can see on the 1 and the 5 where it correlates to. And yeah, we will check back and see. We're looking at cable for later on. We've got our NY line, as you can see, set up on cable. That's looking pretty good at the moment. We're not going to enter till later on, but at the moment we're 20 pips away, which is a perfect entry. See if price will break over our 50 moving average back to our outside of our bands. That's our goal. So as you can see, it's quite, you know, again the pound dropped when the Bank of England came out with its announcement that it's going to cut its help to the market and the pension funds on Friday. That ditched the pound. Then we had a bit of a rally, bit of a recover, and it's kind of trying to worm its way back up. So we just wanted to go this way just a little bit. We'll keep an eye on that, and obviously we don't enter unless we get the right kind of confirmations. But again, everything is really news-led at the moment. You know, the geopolitics and the data is more important. So if you're a fundamental trader, it's better than ever. But for those of you who are into swing trading, your trades are no doubt going to be all over the place at the moment. So saying that, the signals I did on Sunday, one of them didn't trigger. But Euro USD did, and I think we bagged about $300 on that trade. That's 2 weeks in a row. It's just a single signal I give out on a Sunday night to the team, you know, for a buy or sell on two particular things. And it's just one you can set and leave. And yeah, 2 weeks in a row we've had a good win on Euro USD, which again is unusual because I don't usually do a lot of I don't really do any kind of trades that I hold, but I just wanted to do something for the guys in the group who maybe just want to get 1 or 2 trades a week away. So that was pretty good. So that's cable. Let's go back to US30. And so we're edging in on that line. Nice range. On the Fibonacci, we're kind of messing around the 236, 382. So depending on the result, we could get a bounce down to 618. Or I could get a break above 236 into this supply zone. So I've had a few retests, as you can see, 1, 2, nearly tried a third. So in and out, bit rangy as we know before the market opens. Let's just log into Bloomberg as well, as they're going to be waiting for the result. That's one good thing.
Constituency wrapped around another ECB. In this crisis right now, is the ECB more unified than it was in 2008?
And so we're looking for an increase. An increase in the PPI month on month from a minus 0.1 to a 0.2, and on the month on month stripped out, it's going to be lower. So this could be a bit of a mixed bag. We'll have to see what the result is. Like I say, US30 likes to catch people out and usually go the opposite way to the news event. So if this is good news, i.e. higher, I suspect that US30 will drop and vice versa. So, but again, until I see a move, I'm not going to you know, just enter into it. Want to see that move first. As you can see, if this is higher, producer price index is higher, then obviously that means inflation could be higher tomorrow. So it'll push US30 either way, but let's wait and see. And the big one tonight, obviously, and again for the team, if you're a member of our team, like I say, go to www.mohawkforex.com. If you remember the team, later on I will be scalping the FOMC minutes of gold. I'll be on gold on this at 7 PM London time, which is lunchtime in New York. So this will be a good one. Again, no stop loss, no, just you got to go straight in, watch it move, get in, get out. It's fun, it's dangerous, but also can be very rewarding. And we've done it time after time again and pulled away some nice wins on that. And then to end the evening, we'll trade our usual API crude oil, which has also done well for us over the last month or so. If we get a trade on that, we'll take that, and usually that ends up hitting our TP roundabout just when the Aussie session starts. And then tomorrow, we're looking at it, we've got the house price balance for the UK at midnight, inflation for the German, so that will affect DAX, of course, that's before the market opens. And then the big one, the core inflation, and the jobless claims continuing one is what we watch for. But obviously all this is going to be overridden by the inflation rate. Expected to be higher, go to 6.5, inflation rate's up like 0.2, as you see on month. Core is expected to be down, so this is what they want. If the core is down, and everyone's talking about this pivot and everything, but this could be heavy, this could be 7, I mean, and then we're going to see markets really move, so it's going to be interesting tomorrow as well. There's the CPI September as well, so we've got plenty of high impact news tomorrow. Today we're just sticking with the PPI, the open, and then we're done. So seeing what we can bag, what percentage we can get out of our account. So here we go, you can see US30 is just topped out there, getting towards the top of our fib. Just going to move that line out of the way because we're getting close. Bang, there we go. So we're literally 3 minutes away. So good luck.
Can you see our show in Amsterdam in support of the Vermeer show?
Well, yes, of course. I mean, if you want to support it, by all means, I think it's a unique opportunity to see all the Vermeers that are everywhere in the world in a different museum. In the Rijksmuseum in Amsterdam. Absolutely.
We would love to have you and Mr. Ruda show.
You would be more than welcome.
Let's see what we can get on this.
Road trip. Klaus came out of the Dutch Central Bank suggesting we need to be in Amsterdam next year.
Yeah, it was his suggestion, Tom. I'm buying that. Why is there always a trip involved somewhere?
It's not a road trip.
2 minutes to go.
Road trip, and he's saying it's his suggestion because there was a Vermeer show. Didn't you hear him mention it?
He left out the bit about which bar he'd like to go to in Amsterdam. I'd love some more detail on that.
You know,
Tom, he's usually been to one.
To be honest, that point that was being made just there from the central banker was the same that we heard from Axel Weber, which is this ultimately comes down to fiscal policymakers being disciplined. That's where it
That
goes.
was one point. The second point, let's talk about the aspirational goals of these central bankers.
That's the other point.
QT paint drying?
Yeah.
Yeah, come on.
It's really
Give me a break.
boring.
Right, let's go. Right, we're logged into our broker, IC Markets, we're logged in on US30, we're going with the smallest lot sizes as always. I don't want to risk a lot on this. We've got 27 seconds left. So, good luck everybody. Looks like it's pulling back, but that's no indication. We can fly up. We don't just jump in and assume it's going to be a sell or anything crazy like that. Assumption will blow your account. Wait for the move. 5 seconds. 4, 3. Nice move down. Look at that sell. Look at that. That's beautiful. Let's get in on the sell. I managed to get $40 on that move. One nice drop. I think it's going to go down lower as well. Brilliant. And we're done. That's it. Yay. All done and dusted on that sell. Nice and easy. You didn't even need to look at the result because you just so. There you go. Look, higher than expected. So you get the drop on the US30, just as I said. So I didn't even need to look at the result on that one. It was just so obvious when you saw the sell signal kick in. Nice sells, in and out, no messing, just a couple of positions. You don't want to hang around. This could drop lower. I'm going to keep watching it, but what I'm going to do is wait for the pullback, wait for the retracement. But what did we get on that? We got 4 positions away. With one lot size, and we got 30, 60, 90, 100. We got $125, so that will do nicely. Just wait for confirmation. So that was great. So that's put our account up 23% today. So another good day scalping. So yeah, happy with that. I had a kind of a preset of 30 pips on US30. RSI, as you can see, is dipping right down. This could be a false break. We want to see it break inside our zone. Volume's good, so let's see what Bloomberg says as well and see if they announce this result. Surprised they haven't already. Yeah, it's still pushing down, like I say. There we go.
Certainly with gasoline prices, things like that, it does.
On peripheral conversations that I've been having, there is a growing fear that we have not seen peak inflation, that certainly core will continue to gain. I'm talking about CPI. Given these PPI numbers coming in higher than expected, Mike, in your conversations at IIF and IMF, how much is that a pervasive worry?
You know, it's kind of evenly divided. There are people who think that this is going to take a very long time, and I've talked to a number of central bankers. They're all over the place here in Washington, and they all feel that it is going to be a long road till you get inflation back down to target. That doesn't mean that we haven't seen peak inflation.
Let's have a look.
Could come this month.
So it's ranging now, you see. So as I say, you just go in. I got myself a couple of positions and then a couple of positions again, and that's it. You just don't be greedy. Get in, get out, take the green, and then wait for the next move. Because, you know, a lot of the time price will go back to where it was before the news event, before the open. But on something like this, it could drop a bit more. We can zoom out and see. Look, we found the level of support here. Look, on the 1 minute. Put a line across that, and you can see where it's bottomed out. Got retested here 2 and now 3 times, and that's why it's bouncing. Look at that, perfect support level, and also that matches with the 786 and our fib on our 5. So we know it's dangerous to take a sell. We want price to break below this line here and break below. Regardless of what the trend bar and RSI says, you need to wait. This is just micro scalping. If you want a serious move, wait, because we could get a bounce back into our center line. So I'm not putting any buys at the moment because the market's still reacting. Here we go, let's try to break it.
But on the rent side, that forces more people to actually rent rather than own.
Let's watch this.
You're seeing the stickiness of that feeding into CPI is going to be persistent.
But the Fed's going to pause.
Thank you.
I haven't.
Well, no,
How many times
right.
did that come up? The Fed's going to pause.
Well, and this.
Fed's gonna
Well,
pause.
hold on a second, because there is this other
Hold on
argument.
for more than a second.
Paul Krugman actually putting out a Twitter thread echoing what Lael Brainerd was saying, and I think this is important. How much emphasis will there be on the ambiguity of lag time, of how long it takes for some of the tightening that we've already seen to make its way into the financial system, and into the economy, I should say. This is going to be the pushback, not necessarily that, yes, you can pause because CPI is coming in, but we can pause because we have not yet seen the impact of what we've already done.
That was 45. I promised.
Thank you.
Any more?
No, I'm good.
You good? Do you want to go to Conrad?
Sure. Hi, Conrad. How's it going? You want to save me? Conrad DeQuadro, Senior Economic Advisor at Breen Capital. So let's start there. This question of, do you see that as a reasonable argument that the lag time is so significant that it would make sense for the Fed to pause, that the risk of them really causing a huge recession outweighs the risks that the tightening that they've done already is insufficient to combat inflation?
Well, Lisa, I think the question of lags is a very important one. Unfortunately, the Fed didn't consider that on the other end of this. When we were heading into this inflation problem, we had some signs that inflation was picking up.
Price is breaking. Let's have a look.
They didn't appreciate the lags of their prior accommodative policy. So I think I don't think that means we should ignore the fact that there are lags on the other side as well. But I just think it's too soon to consider that. I think it's very helpful.
Cool.
The Fed has started to
Just jumped in there and grabbed another $20. Just a quick one, in and out on that. It said me click. I took a 91 cents loss and then a 4, a 5 and a 5. So win. So again, jumped in on that continuation sell. Cheeky sells, as I say. Again, why? Because price broke below that line, but now it's going to find another area of support. So I don't want to risk any more until it's found that level, even the bottom of this Fibonacci. You can see here, look, that's the level. Again, if I just put a line just above it there. So this is the zone we're looking at now. So we can be looking to buy if price goes above into our zone, and we're looking to sell if it goes lower here. Until that, we just sit and wait, because we know what US30 is like. It can just range and trip you.
I think that's a restrictive rate. The issue is here, we don't really know where neutral is, and we have different ways of trying to assess it. And I think that looking at real rates is one way to do it. And then the other way is just look at some of the measures that we're seeing that I think are relevant for inflation. So, inflation modeling is extremely difficult, but if we look at some of the things that gave us clues that there was an inflation problem coming, business surveys, for example, last week we had the ISM services survey. 68% of firms still seeing rising prices. That was in the low 50s prior to.
There it is, breaking back. Look.
This week we got the NFIB survey. 50% of firms that are still raising.
RSI still not near our neutral zone, so I want to be waiting for that to get back into our neutral zone. Because look, you get a fake out like this. You see, so tempting to go in. Didn't break into our zone. Look, but the volume's right, but you just don't know at the moment. On the 5, you can see, look, it's still ranging, still holding on that line. So, we haven't got a signal or anything. That sell signal was brilliant. As soon as I saw that sell signal flash, that's a good thing about this. It's pretty much 80-90% accurate that it's going to happen. How long it's going to last for is for you to determine using your technical analysis, but enough to grab some pips and get out the trade,
We don't have price stability yet.
This next question's pertinent, I think, to the conversation we're having. I'm going to try another concept.
So yeah, there you go. It was caught out.
Where it is, but where do you and the team suppose Naira is?
0.4. So that's it for news today. Now we're just going to sit back and wait and see if there's any more scalping to be done. Let's see if it's going to push back. I think it's just going to range along. Then we've got a tight zone here and here. I mean, the most it's going to go to, if you wanted to set a TP, is below that spike at 618 here, look. So that's, again, it's a real tight range, look, it's in. So you're looking at 30 pips still. But we know US30 does this pattern. If there's a news an hour before the open, it'll make the move, range along, slowly climb its way back while up and down, scaring everybody trade. So what do? Don't trade it. Wait for the open. Wait another, we've got less than an hour and we can trade again. Why risk it just for this zone? Yeah, we can nip in and out and get a few pips, but you'll end up in a trade whether you can't get out of until the open. And you don't want to be trapped in a trade on the open, because then it's a 50-50 chance that you're either going to hit your stop loss or wipe your account out, or if you're lucky, go the way.
Given that inflation is probably still going to be pretty elevated in the early part of next year.
But I was good. I enjoyed that news event, and like I say, these news events that usually wouldn't have that much bearing really do move. You wouldn't usually get a move like this on PPI, not a couple of years ago. Let's have a look at how it affected cable. As you can see, dropped a little bit, but really didn't do much. The dollar weakened, as you can see there. Look, it just dropped. So it's probably a good 10 pips, I bet. Move on the top of that candle. Yeah, look, good 20 pips. It's actually a decent move. And again, the sell signal was there, just a continuation. Where's your TP going to be? Just above that 382. So that's where you would have got out of the trade if you took the sell on cable. So I don't scalp Forex pairs on news events because of the spreads and the commissions, you know, and also it's two things fighting against each other. So you're both trading a single, like an indices or a commodity. In my experience, that's just my educational purposes only, remember. Don't follow me. Don't ever follow me.
And basically his argument is you need to keep.
But that's a good level it's breaking now. Look. But say we're not panicking on cable because we're going to enter a trade later on. The further price moves away from our NY line, the better. And then we can scalp that back, because I'm sure he'll get back to that 110. It's just waiting for that trigger point. At the moment we are 40 pips away. We're only going to go for 10. So I don't even have to hold for it to go to NY. You can scale it and move your stop loss and all that, you know, whatever you want to do. For me, I just want to get my 10 and I'm done. The less you're in the markets, less chance of losing.
Futures rolling over, going into CPI tomorrow. We're now positive just about a 1% on the S&P. Up next, Victoria Green, G Squared Private Wealth, Colin Martin at Schwab Centre for Financial Research, and Daryl Cronk of Wells Fargo in the next hour, counting you down to the opening bell from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. NATO defense chiefs are meeting in Brussels today to discuss how to better protect critical infrastructure, ramp up weapon production, and maintain support for Ukraine.
Russia knows that the nuclear war cannot be won, must never be fought. And we are, of course, also closely monitoring the Russian nuclear posture. We haven't seen any changes in the nuclear posture of Russia, but we will remain vigilant.
Meanwhile, the U.S. is speeding up shipment of 2 advanced air defense systems to Ukraine in response to President Volodymyr Zelensky.
US30, there you go, look, as I said, creeping slowly back, bounced off that support. If I was watching it, I probably would have jumped in just on this trade here, on that. It's now hitting some resistance. Nice scalp towards the centre line. It could just range. Look again, I told you it would hit the top of that spike and then pull back, and it has done. So you needed to have got in as that candle broke above this level here. We could have got in for a quick one. Wait for price to break above the 50 moving average now. Don't get FOMO if you miss it. I'm doing other things. You can set alerts, but there's enough trades to do what you need to do.
According to data from Flight Radar 24, with more than 10,000 users following its journey. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Well, we're happy with that. Let's just see how US30 is going to get on now towards the open. See if we're going to get a blip. See what I mean? You see, it just found that level of support here. Look, which you can see. You can think, why is it in the middle of the band? Is it pulled back and not hit the band? Well, look at the 5-minute Fibonacci, and you can see because it hit the 618, and we know the 618 is an area that loves to pull back from. Get into that golden zone.
Well, you know, we have a unique way
Again, if I get rid of these levels,
I'm not sure it's right or wrong. It just happens to be our way. And we
you can see what I mean. Look, if you put a line just below the 618, look, bang, there you go. So every time you line up that Fibonacci on the 5 minutes, it relates to the 1 minute, and you can explain to yourself why you shouldn't have been setting your TP initially at the band, but just there, because you want to look at the bigger time frame. And again, if price breaks above here, then you're probably going to that next level, the 50 moving average. If it sits on top of the moving average, you look at your next level of Fibonacci on the 5-minute time frame, which you can see is going to be there or there. And they do move, remember, the fib will move, but it's just at the moment you can see the lines are there and there. You've got areas that you can set as take profit there and there if price breaks. But like I say, we're bearish. We've had higher figures, so worse news for the market, so the edging is towards the downside. Buys on anything at the moment are more risky than the sells. That's just, don't matter what you're trading at the moment, because no one's really buying, or if they're buying, they're just holding for a little bit and then getting out the trade. So if things produce sells for us, again, that's another reason to get straight in, because you know that's where the market is at the moment. You don't need to see a bigger time frame. We're fundamental traders. We're looking at the news and the geopolitical, and everything is going down overall rather than up. So you know, if you didn't do anything else, you'd probably just sell other than buy without fundamental news for now anyway, until the market's, you know, could be next year before we have a bull market again, maybe the year after, who knows.
Grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-adverse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Strong enough to stay, we will never.
Central banks are in a really bad situation. They have started late in raising rates, and now the central banks are doing big steps to catch up with reality, and there is some risk in that. So I now look at monetary policy as an independent risk factor, and I think monetary policy has a way to go.
Axel Weber there speaking with our own Tom Keene down in Washington, D.C. at the IIF meetings. Really a compelling suite of different conversations at a time of incredible change, where suddenly people are reassessing the role of monetary policy in a newly inflationary world. Right now, what we are seeing in this newly inflationary world is that any upside surprise when it comes to inflation reads, the latest being PPI, not necessarily considered a major indicator. Still, the knee-jerk response was stocks lower off the highs of the session, and bond yields just a slight bit higher. You're seeing a little bit of a retracement back. S&P futures up about 3 to 4 tenths of a percent, 36.13. You're seeing the euro decline versus the dollar, weekend 97.06, and you are seeing crude just soften a little bit after some discussion from OPEC Plus that they expect demand to be lower this year because of just the deceleration. Right now, let's head back down to Washington, D.C.
There you go. As I said, see, it's hit that level of resistance from the 5-minute fib, respected it, pulled back, and we're forming a nice kind of W pattern. So we're forming a little wave pattern here
Monetary Fund. Tomorrow,
I like to see.
From the offices of the International Monetary Fund with some important interviews.
Can be good.
Right now, we go all American, and we can do that. If you go to the Art Institute of Chicago and go to the very back of the Art Institute, past the Chagall, there is the old trading room of the Chicago Commodity Exchange. It's really something to see from another time and place. That is the CFTC associated with.
Post that actually, because that's a good chart to visualize. I love when you see the, you know, W's and M's, double tops, double bottoms. I like trading them as well, spotting them. But like I say, nothing's guaranteed at the moment. Usually I would say wait for that second leg, but it might never come. This could be on the open, bit of market manipulation. Everyone's going to be looking to sell on the open, so the market, guess what, will go the opposite way to take everyone's pending orders out of the equation, grab that liquidity, then we'll get the drop. So we could get a short second leg. You know, and obviously to do that we want the price to come down outside the bands and then pull back in. So again, that's a lot of times how it works.
Oh, this is a great question, and not just a great one, a necessary one. To be honest, in the current onset of the current crypto winter, $2 trillion asset sell-off, what comes sharply into focus from my perspective is institutional investors and retail investors. Starting with the latter, in fact, what we could think carefully about is the reality that retail investors have suffered significant losses in light of the onset of this crypto winter. Something else I'd share is if we couple this thinking with the Bank of New York's announcement yesterday. This is Alexander Hamilton's bank, founded as one of the oldest in the history of our nation, now acknowledging that it will, on its platform, service not only conventional financial products, but cryptocurrencies, suggesting and signaling that in the near and not so distant future, institutional investors will be investing in this space as well.
And what's good about this, folks, is they kept from Commissioner Johnson my thoughts on Bitcoin, and we're not going there right now. There's a guy, used to work at JP Morgan, and there's this guy up on the 100th floor named Diamond who's going both ways on Bitcoin. He's saying this is a fraud, and excuse me, Jamie, but something like that. And the other thing is we need to learn about this and do about it. How can CFTC do better than SEC at helping banks on this is a fraud versus this is what we need to do to move forward?
Let me explain what the CFTC is already doing.
What are you doing right now?
In our remit, we are enforcing to the fullest extent of our authority to ensure against fraud, market manipulation, any types of abuse to retail customers who are heavily engaged, as I mentioned, in this market. So that includes first of their kind lawsuits for pump and dump schemes over the last several months, first of their kind Bitcoin or cryptocurrency asset management fund scams against retail investors, and very, very recently, a first of its kind suit against a decentralized autonomous organization.
This is so important. With Bitcoin 60,000 down to 20,000 as well. The little guy, and I've seen this, folks, generational, they fervently believe in Bitcoin. Are they believing in a derivative instrument, the province of the CFTC, or are they believing maybe in a financial asset under SEC 34 and 36, I think? Is it an SEC province thing, or is it a derivative thing of CFTC?
Your question about whether or not the Securities Act Section 2A1 definition of a security encompasses...
on that. Let's continue in Section A21B. Go.
So essentially what we're asking is what qualifies as a security. And in fact, there are two bipartisan bills currently pending in Congress that are working diligently, Senate staffers working diligently to capture an answer to this question. It's a wonderful question that's rich and reflective of the history of financial markets regulation in our nation in 1946.
Why can't you two get, I'm going to interrupt, why can't you two get along? Why can't the SEC and the CFTC both work on this, which I dubious thing, 60,000 down to 20,000?
I'm going to say we better get along. For the sake of those investors that I referenced earlier, there is a path, and we've walked that path before.
See, it's just dropping lower. You can adjust this.
I've had a great opportunity to engage with his office, with him, with other commissioners at the SEC. I think we are all in agreement and on one accord that we want to protect market integrity.
Got 6 minutes till the top of the hour. So it'll be interesting to see if we get a move. So look at cable again, just ranging now. stuck between that 110.5, 110.5, 8, 5, 9, just small micro moves at the moment, nothing major. What a big move we do. We want it to stay where it is actually until we get to our line.
The 8 gazillionaires that are doing Bitcoin, are they buying off the American politicians?
I can only tell you what I know.
Just move this out of the way now. That was a good
Debbie
result on the PPI.
I'm a native Michigander, so we are neighbors in many respects. I believe that she is deeply engaged in expanding the remit of the CFTC over spot market transactions for the purpose of ensuring that a regulatory gap that exists right now is closed.
I got 30 seconds. What happens to the retail investors if Bitcoin breaks support 19,000 and goes down to 16 or 15?
Yeah.
What's the ramifications of that?
The ramifications are significant because those investors are the most critical, in my humble opinion, in our markets. And our most sacred task is to ensure the protection of those investors and the integrity of our markets. So I am diligently committed, whatever we have to do.
Commissioner, I'm exhausted, Lisa. Commissioner, thank you so much. Kristen Johnson of the CFTC there on Section 12, Item 2.
2A1, Securities Act, 1933.
It's very 2A1, Lisa.
Tom, wonderful interview. Thank you so much, and great recitation there of the different provisions and the different subsets. Coming up on Balance of Power on Bloomberg TV and Radio, Kay Bailey Hutchinson, former U.S. ambassador to NATO, to break down some of what's happening internationally in markets. We are seeing a bit of a retracement from earlier gains, but still trying to recoup after yesterday's brutal session in stocks. This is Bloomberg.
And US30 doing exactly what I said. Nice little range before the open. No big moves. Just takes W out of the way now because I can see that pattern. And there is in the system, there is an automatic wave generator that will draw the zigzag for you as well. So for those of you who can't see patterns like that, it's built into one of our indicators, so you can have that to your chart all the time. So seeing US30 just range along, look, that was the only kind of buy was there, which is I took a little bit, got out before it hit that, and now we're pretty much back to where we were, where the news dropped, and then we'll either get a bigger move to the downside. On the one that you can see, there's a line there, look, where it all goes, right down the bottom. For support, I'm going to stick it about there. It's kind of the extreme level without the bigger drops down to here. Look, they're all different levels, but that's the next one I'm looking at if price comes down as a TP. I'll leave these levels set, just got an idea. And again, they're all related to the Fibonacci, and you can see on the 5-minute, look, you know. So you can use the 1 minute for your entries and use your 5-minute to get out the trade if you want. You know, there's multiple ways of doing it that I can teach. But that is a good way to do it. Just put the lines on from the fib at the time when you take the entry, and then you know an idea of taking TP1, 2 and 3 if price goes back up there, or if we break below here, we're going down.
So you've got to explain this one to me.
And of course, if we're going down, you can stick at the moment a line on the extension. Let me just
Lots of Bloombergs, lots of Bloomberg, lots of Bloomberg, lots of Bloomberg, lots of Bloomberg.
get rid of that.
I've seen the Bloomberg. I've seen the Bloomberg.
So there, as you can see, would be your level for support. Look at the next, just above that demand zone where people are looking to take buys. There's prices stacked up there from previous. So straight away on here, you know, you've got a level if it price breaks below, and what you can do is the Fibonacci will draw on the 5-minute. But say you wanted to draw one on the one, you can just pull it like that on the 1 minute, and then you can expand it, and then straight away you've got yourself some areas of take profit for the sell. Then if your price breaks below here, there's your entry. You've got TP 1, 2, 3, 4. Well, you wouldn't take around the golden zone, but you've got TPs 1, 2, then you leave it alone, and then 3, 4, 5. So that's how you can do it. You keep it nice and simple. So if you use the fib based on the 1 minute, or use the automatic fib on the 5 minute. But that's a good way to do, and then you can measure what your potential risk to reward is, and you're still going to get a chance of 20 pips on the drop. So I'll actually leave that on there just to see when it gets towards the open. It's interesting just to see if price breaks on the open, we hit TP1, 2. Here's the move down, look, and guess what, it's 2 PM exactly, so just gone.
As we head into CPI this week.
We have a big release this week.
Again, not looking to take another sell, just going to leave it now. Like I say, I want to leave it alone.
Until we see concrete signs of inflation peaking,
They are going to be done left to slowing in the economy. If we have an upside surprise, it could reinforce the resolve of the Fed to over-tighten.
That's the risk. We could get another 75 basis points.
But if we have a downside surprise, one data point is not going to sway them.
The markets have been looking for any window of change and pivot, and I just don't think it's there.
There's no pivot. The Fed has got to keep going. It's all about the Fed. It's all about central banks.
The difficulty of balancing growth, inflation, and financial stability.
Certainly, we'll be watching that CPI release.
That CPI release coming tomorrow morning. Joining us now is G Square's Victoria Green, Colin Martin and Charles Schwab. Victoria, first to you. PPI coming in hot. What are you and the team looking for tomorrow morning?
I mean, I don't think that bodes well for 8.1 or a 7 print. I think that means it's going to come in high. I think housing is going to be an issue that may come in stronger, and core CPI continues to grow mostly because of the housing problem. So looking forward, PPI does not bode well for a good print tomorrow.
Colin, you agree?
I do agree with today's, hotter than expected PPI. It doesn't bode well for CPI tomorrow. What we're looking at is less about those year-over-year numbers and more about the month-over-month. And when you look at core CPI, it's still coming in hot on an annualized basis. So I think we hear a lot of concerns about a potential Fed pivot or lack thereof. I think we can retire that. We know it's not coming. The question now is, how long does this high inflation persist? The Fed needs to see concrete evidence that it's going to start coming down. And while we're seeing some signs, today's PPI report doesn't help. And if we see a higher than expected core CPI number tomorrow, that's a risk that the Fed will not just continue to be aggressive, but be maybe aggressive longer than people are expecting.
So they keep hiking. This is what Bob Michael at JP Morgan Asset Management had to say to the team here at Bloomberg. When the central bank steps on the brakes, something goes through the windshield. The cost of financing has gone up. It will create tension in the system. I put that to Mohamed Al-Erin yesterday, who said going through the windshield right now is the economy. It was the financial system as well. Colin, can you give me your view on that? What is going through the windshield right now?
Sure, that's a risk we see. We phrase it a different way. We say when the Fed hikes, things break. And, frankly, we haven't started to see too many things break just yet. Yes, obviously stock prices are down. When we look at things like the credit markets, they are holding up better than we would expect them to hold up, and that's where we see a key risk right now. When you look at the rise in borrowing costs, what that means for corporations, rising input costs, rising labor costs, but wages continue to grow. Those are huge key risks for the credit markets. When you look at spreads, however, they're kind of still hanging in there. And when you look at a, say, 5.25% spread for high-yield bonds, when we look at
investors waiting for Thursday's CPI print.
Slower economic growth, we think
yep. And now we've had the PPI. Yeah, everything's going to be waiting for it, as you can see.
That's something that we're focusing
on. Right, so you look on US30.
We think we'll see those spreads rise and high-yield bond prices fall.
There's a ton of tightening in the pipeline.
Got a line across for the open.
In yesterday's session on the S&P 55.68 on the S&P 500. You know the story, Victoria. There's people just itching to buy this still. They just want to get in there, get away from cash and start buying stocks again. They're waiting for that Fed pivot to flash the green light and say go, go, go. You're pushing back against that, aren't you?
Yeah, I don't really see it until the 3,400 level. I think you're still early. You know, I think everybody is hoping for this pivot, but the pivot is dead. You know, we say long live the rate hikes because that's what's coming. You got 75.50, probably 25. I mean,
Long live the rate hikes.
In the economy, typically unemployment doesn't
I like
start
that.
going up for like another 12 months. We had that weird jolt reading, not weird, but a very, very big fall in jolt. So we're seeing the effects, and the problem is the delayed effects when they go this hard, this fast, tends to make it very hard to make a soft landing. And when we talk about credit spreads and what's happening in the markets, it's just not there yet. You don't have your capitulation. You are fighting a very hawkish Fed. You know, everybody's a little bit excited about what's happening in the UK just because maybe that liquidity problem there starts to bleed in here. And we've already said the only two things that will stop the Fed is liquidity issues or the unemployment rising. And we haven't seen either one of those yet in the US.
There's that drop.
We have seen a little bit bleeding in the UK, John, and I'm sure you're aware, you know, the 3 days and what's happening over there. I mean, the only good thing that came of that
Push
is
that
the memes,
push.
because that's been mocked. You know, you can't really put people on the clock. It creates this chaos. So I do applaud slightly the BOE in the UK for making the US look a little bit more functional these days, so I'll take it.
Governor Bailey making it pretty clear. You've got 3 days.
We've announced that we will be out by the end of this week. We think the rebalancing must be done. And my message to the funds involved and all the firms involved in managing those funds, you've got 3 days left now. You've got to get this done. Because again, part of the essence, I think, of a financial stability intervention is that it is clearly temporary.
One report calling that timeline into question. The FT reporting the BOE signaled to bankers earlier this week it could extend purchases past Friday. A spokesperson for the central bank pushing back, saying temporary and targeted purchases of gilts will end on October 14th. It has been made absolutely clear in contact with the banks at senior levels. Guy Johnson out of London joins us now for more. Guy, I think all of our heads are just spinning.
Absolutely. So it's worth probably taking a step back and thinking about what is happening here. Clearly, the Bank of England wanted to disabuse the market of any idea that there is going to be any kind of extension. That FT report probably was the catalyst for that. Does make you that was a very emphatic statement, wasn't it, from the governor? Makes you wonder kind of what information they are getting from the market. The plan that they've put in place in some ways hasn't been effective, and there are a number of reasons for that. In some ways, it's very different to QE. They are not price agnostic. The other thing is, John, that a lot of this is about the unwinding of swaps. So you need the collateral for the swaps, which then
just sat on that, so it didn't quite break.
You can settle the swap with them, but you can't settle the swap with anybody else. So you
But I'm not taking any trades on US30 till the open now. You just don't want to risk it. You don't want to be stuck in something unless there's a news event or a big move. It's just kind of waiting. Enter on news events, enter on opens, and then some late night scalping, and that's it, done, dusted. You know.
But at the moment, I'm surprised that the Bank of England is pushing as
So
hard
look
as
at
it
cable.
is on this one. I think a lot of people are surprised that the Bank of England is pushing on this one as hard as it is. We've still got to wait until we get the...
Cable's got a fair bit to go yet. There's no kind of momentum as you'd expect.
Obviously to that next rate hike from the Bank of England. So there's a huge kind of period of uncertainty. So John, yeah, the price action this morning was extraordinary. I think that was because the bank basically said that FT report, there's nothing doing there.
It's nuts right now. The 10-year up 17 basis points, the 460, the 30-year yield up 27 basis points, north of 5%. These are the levels that we were looking at back at the end of September, and in some cases, in some maturities, we're through it. Guy, do you get the sense, and I understand this is difficult to do, but this is the challenge at the moment, do you get the sense from them that they're worried about contributing to perceived...
You can see, look, as I said, it's going to hit TP1 on the sell if you did take that.
John, absolutely. You listen to what Hugh Pill has been saying up in Glasgow today, the chief economist. He is making it very clear that he thinks currently the fiscal position is going to be inflationary. They need to lean in on that. They are going to raise rates aggressively to deal with that. They want to make sure, this is why they've structured this program in the way that they've structured it, is that this is not QE and you should not perceive it as QE. Now, I think once, again, you take a step back, it looks awfully like QE, but they're trying to find ways of making it not look like QE. The way they've structured it, they are not price agnostic. They don't have to take your bid. They are making it very clear that this is not QE. So I think that understanding is real, and I think that may be contributing to their desire to get out of this on time. Now, whether or not that is the right call, I don't know. But the governor sounded very emphatic there
which does slightly make me wonder as well whether he knows something else as to what is happening in the market at the moment. Just how many funds are affected by this problem?
They're not backing away. The government's not backing away either. Guy Johnson, what a month lined up in the United Kingdom. So October 14th, the gilt market operation is set to end on Friday. End of the month on Halloween, get a fiscal announcement from the government, and you get some forecasts from the OBR as well. Then on November 3rd, you get a Bank of England rate decision. Colin Martin, I wonder if it plays out that way, or whether we have to get a decision before that.
We could. I think the key point right now is uncertainty. And as Guy was talking about, there's a fine line between QE, QT, and really just helping provide market stability. I think things happening in between meetings certainly can't be ruled out, but it's very fluid right now. The way we're approaching it right now on the
Hit that TP1, you see, beautiful. So you could have taken that trade as the trade broke here, as the price broke on that fib, and then straight down TP1. So that was a good nice trade, you see. Simple setup, as I showed you, just by using the 1 minute Fibonacci, and then obviously price bounces off it, which you expect. So that's why I'm not greedy. If price comes back and retests that 782 line, then you're going down to the next level. And if it weren't close to the open, I'd have taken that. But when we're like 25 minutes away, I just want to wait for the move, the bigger move.
Another question that I've heard a few times on this side of the pond, it's why do I care? Why do I care what's happening in the gilt market? What does it matter to me and my allocations here in the United States? Should they care?
Yes, they should. I mean, it does matter. The UK is a very large market, both on the financial.
So I'm just going to go and top my coffee up. So I'll be back in 5 minutes before the open.
If they, catch a cold, we're going to sneeze too. And so you have to look at that and realize it is all interconnected. And when you have a currency crisis or a bond market crisis, it tends to affect every other market as well. And so we can't be agnostic to what's happening over there. And you have to also say, how much is this going to be something that happens in the U.S.? How much do we have to be concerned about liquidity drying up and having some sort of lockup in the fixed income markets? Obviously, treasury markets have still remained very liquid, and relative to the rest of the world, they're hanging in their yield buys. Obviously, the 2-year at 4.3 is extremely expensive, and we have 40 basis points inversion. So you have to say recession, and even Biden tacitly understanding that a recession is coming. When the president realizes and says out loud and says the quiet part out loud, that yes, we may have a soft recession, that tends to mean that the data is very poor. So it's going to matter, and look at what Yellen said yesterday. The US dollar is probably going to continue to go up because of our policies here. We have a relatively strong economy. We have a very strong currency. And if you look at what's happening with sterling and with the yen, I mean, the yen's trading back to where they did intervention in 98. So what's going to happen over there? So I think you have to realize it is all interconnected, and it does matter.
Victoria Green, Colin Martin, sticking with us. Coming up on this program, the president dropping the R word.
I don't think there will be a recession. If it is, it'll be a very slight recession. That is, we'll move down slightly.
AMH right here in New York City. That conversation up next.
A lot of the satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
I don't think there will be a recession. If it is, it'll be a very slight recession. That is, we'll move down slightly. Look, think about what's happened. We have done more. We're in a better position than any other major country in the world.
The president acknowledging the risk of recession and downplaying the risk of recession at the same time. Secretary Yellen promoting the strength of the economy, as you might expect, saying this: the US is doing very well. We have to continue to have a very resilient economy, an economy that's slowing, but something we expected fully after a very strong recovery. I remain encouraged. The Secretary of the Treasury speaking to CNBC just yesterday. AMH with us right here in New York City. Anne-Marie, I have to say the story that they're selling going into the midterms gets a little bit harder to sell.
Yeah, it does, especially after you see what's happening with producer prices just today. What the president is saying is that he's downplaying this risk of a recession. But what president is going to forecast a recession 4 weeks before the midterm elections? One thing they are leaning into, Jonathan, is the robust job market and the labor market. 3.5% unemployment rate. What they continuously say is that this administration added 10 million jobs. Now, Mike McKee would say 10 million jobs were recovered because the economy was completely battered. But this is what you're going to lean into. The issue is, you and I do not feel our neighbor getting a new job. What we do feel is gas prices going up, food prices going up, and our rent prices going up. And just for a moment, can we quickly juxtapose this position? Just a few blocks from the White House, you have the IMF saying the worst is yet to come, and that in 2023, everyone will feel like they're living in a recession.
Politically, that's not a message you want to send right now. And we know how the international story is bleeding into the domestic one, with Saudi Arabia very much in focus for this administration. Take a listen to what the president had to say.
There's going to be some consequences for what they've done with Russia.
What kind of consequences? Menendez says suspend all arms sales. Is that something you'd consider?
I'm not going to get into what I'd consider and what I have in mind, but there will be consequences.
There are many reasons, AMH, to think about reassessing the relationship with Saudi Arabia. It's curious to me that this was the line in the sand for so many people.
Yeah, it is interesting, especially given the fact that before the president made this historic trip, many, especially on his own party, the progressives in his party, were saying you should not go there based on human rights concerns. Now they are looking at reassessing it after an OPEC decision. And in this interview the president gave to CNN, he also talked about the fact that he wanted to make it clear. He wanted to set the record straight. He was not going to the kingdom because of oil. Yet, given the fact that Saudi Arabia, the de facto leader of OPEC, cut production, now they are thinking of recalibrating it. But if the trip wasn't about oil, why are you recalibrating the relationship? The fact of the matter is there are two things the administration could do or Congress can do. Because right now, Jonathan, what you're hearing from both sides of the aisle is that they are very upset with Riyadh. No OPEC is coming back. This could potentially mean, if the president were to sign it and this legislation is revised and passed off on a bicameral basis, that the U.S. government could go after these producing countries for manipulating the market. And then, of course, there's things like arms sales.
Yet they want to manipulate the market at the same time. I can't get my head
SPR,
around it.
Oil price caps.
What's that?
These are things
that's managing the market.
This is what producers will tell you back. This is what they will. This is their argument.
Anne-Marie, down in D.C., up in New York this morning. Anne-Marie, thank you. Victoria Green, Colin Martin back with us. Victoria, let's start here, just with a question first. Do you get the sense what is happening in the energy market is a one-off shock or a big permanent adjustment that we need to adjust to?
I think it's going to be a bit permanent, especially with what's happening with Russia. So, you know, part of the Saudi cuts were really a headline cut because they really only had about a million barrels they're cutting because they were underproducing, and they were concerned on demand. It certainly was a slap in the face to the Biden administration. I think they're going to have to release the SPR reserves, even though we're only at 416. You know, we're down to the 1980s levels. I think because of what's happening in Russia, we have new sanctions taking place, and what most people don't understand is that the sanctions taking place in November is about insuring the cargoes, and the insurance for cargoes of oil, like something ridiculous, like 95% of it comes from the UK and from Europe. So if you can't insure the cargo, the ships aren't going to run. And so because of those sanctions, I think the last time that Russia can ship oil out to get to Asia, which is where they've been selling, is to Asia and India, is something in late October because of the time it takes to transit the Suez Canal. So you're seeing suddenly the Russian market may completely shut down if they cannot ship on cargo ships that are insured, because nobody wants to insure it from the UK and Europe. So I think this market is adjusting higher. You know, Saudi Arabia does seem to be aligning a little bit more with Russia, but you still have wild cards. You have Iran that obviously could come on board.
True.
They have a lot of production. They have a lot of floating storage. And then right now, the U.S. has become a net exporter of crude oil and crude oil products. And so it has been net beneficial to the U.S. producers. It's not great for the U.S. consumer. You know, we're up 30 cents in gasoline prices over the last 30 days. You know, oil prices back at 90, up about 13% here in October. So, yeah, rising gas prices and going into an election is not good for anybody's political party.
Colin, I worry about the policymakers' approach to this, the time horizon they have. The administration is focused overwhelmingly on the midterms. The Europeans are focused overwhelmingly on getting through winter. I get it. That's the issue right in front of their face right now. But when you think about things the way Victoria just framed them, not as a one-off shock, not as one winter, one war, but as something more permanent, you have to calibrate policy for that. And exhausting the SPR, going into something that is a permanent adjustment for the world economy, taking out Russian barrels. Colin, mistakes happen. And I have to say that I think you can take this beyond commodities. I think you can take it to the equity market as well. There are still a lot of people looking at this equity market, treating stocks and this market regime as just an aberration, that ultimately we return to the previous regime at some point in the next 12 months. Rates are going back down, tech will rip, it's the old playbook, it's coming out soon. Colin, do you push back against all two of those things? Both?
Well, on the energy front and the length of time, the permanence, I think one thing that's important, and this impacts at least policy from a Fed standpoint, if we have a prolonged period of elevated oil prices and elevated gas prices, we know that if the prices don't change, that doesn't impact the rate of inflation, right? But if the price is high, that has an impact if we're going into that dreaded R word, the recession. If growth does slow, and we start to see the cost of borrowing rise, we start to see wage growth slow, and consumers, as Victoria mentioned, are still kind of struggling at the pump, paying more for their electricity bills, gas, things like that. That has an impact, even if the rate of change hasn't changed or is flat over the next year or so from a gas standpoint. Now, as it relates to the markets, I'll leave our colleagues at Schwab, like Liz Ann Saunders, to talk about the equity markets. What we're seeing in terms of what this means from a policy standpoint over the next few months is ultimately we think that there's going to be a slowdown. We're seeing an inverted yield curve at some of its deepest and most inverted points in a long time. We don't expect a cut necessarily in the near term, mainly because most Fed officials have told us that's not their plan. But at the end of the day, we do expect ramifications from everything that's going on, both domestically and abroad. We do expect growth to slow from here on out. And there's a negative impact of these Fed rate hikes, not just to fight inflation, but it makes the cost of borrowing more expensive. So when we look ahead 6 months, 12 months, how the consumer's feeling, they might not be feeling as good in 6 or 12 months as they do right now.
Hey, Colin. Good to catch up, sir, as always. Colin Martin there alongside Victoria Green. Victoria, thanks for being with us here in New York. Your equity market, the S&P futures were up by about 1%. They're now almost unchanged, up about 0.1%, coming off the back of PPI numbers from about 50 minutes ago, coming in just a little bit hotter than expected, anticipating now maybe the same thing from CPI. Equities fade going into that print and going into the market open, 7 minutes away from the opening bell. Up next, the morning calls, and later, Wells Fargo's Darryl Crum, staying defensive to weather a looming US recession. Darryl joins us around the opening bell. That conversation coming right up.
Right, am I back? Coffee's all done on. It's our final trades of the day until the meeting minutes tonight. We're set up, as you can see. Just going to get rid of this Fibonacci off here now to clean it up a little bit, because we don't need any of this anymore. These are areas that are too far away now, so we don't need them for now. Clean it up a little bit. There we go. Which way is it going to go? It looks like everything's pointing to the downside, but again, wait for that market manipulation. Don't just assume there's going to be a sell, remember. I mean, you know, like I say, that we can trade the manipulation, then trade the big move. That's the way to do it. Five minutes to go. And again, always double check. Logged in, yep, and we're going for the smallest lot size again, so 10 cents. And we've got a preset of 300 pips, which is 30 pips in normal terms. And we just see how many positions my broker will execute for me when I go for it.
We're up by a little more than 1/10 of 1% on the S&P. On the NASDAQ, up by 1/10 of 1% also. In yesterday's session, new lows for 2022 in the equity market. At the front end of the treasury market, new highs on a 2-year yield. In the gilt market, new highs at the long end of the bond market. Your 10-year is up by 16 basis points. Your 30-year up by around about 27. Bit of tension returning to that bond market in the last couple of days. That's the price action. Here's your morning calls. Your first call from Morgan Stanley, downgrading Stanley Black & Decker to equal weight, expecting weaker demand as consumers cut back on spending. Gordon Haskett upgrading Lyft to buy, highlighting the stock's favourable risk reward and overly negative market sentiment. That stock is up by 2.6%. And finally, UBS upgrading Norwegian Cruise Line to a buy, seeing a notable increase in bookings ahead of earnings next week. That's 3 your morning calls up.
Let's get rid of this crazy advert, and then we will.
Increase in bookings ahead of earnings next week.
So we literally got 3 minutes to go. We're all set up. We've got an area here down below where we can think price might drop to. If it goes higher, then we're probably going to go into our golden zone. So, but obviously I'm just going to get out at 10. If it hits the outside the bands here, we're gone. You can set the line there and you can see where it might go. If I've been too greedy, like there, look. That ties up nicely with a 382 on the fib, and just go underneath it there. There you go. So you've got kind of a level set.
That's the message from Wells Fargo's Daryl Kroc. He joins us at the opening bell. Your cash open up next.
Right, good luck everybody. And like I say, this is good entertainment, remember. Not financial advice, just me messing around with a few dollars, trying to get in and out the market. Don't follow me, ever. Right, so I'm checking. Yeah, make sure we're logged in. Yeah, we're on. Let's see. Like I said, I did click for about 9-10 positions and I only filled 4, and that's the way it happens. And you've got the slippage and stuff, so to take into consideration. But usually if there's a big enough mood, or all that, you know, comes out in the wash, you just need a broker. Luckily IC Markets is pretty good. It's a quick executor on scalping, and some brokers I know don't like it and just won't let you execute like I do. So, you know, it's highly recommended if you're outside America, of course. We've got 40 seconds left. Good luck everybody. Are we going to get a manipulation to the upside and then a drop, or are we going to get a complete tumble off? A nice M pattern formed after our W, you see, so the second leg. Now it's going to work its way back up. Let's see.
Known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation.
Okay, we're ready. 10 seconds. Good luck everybody. What's the move going to be? Going to break that 50. And immediately they can see that drop. Look at that, beautiful. Let's see what happens. Brilliant, and we're out. Yay. Well, that was good because I managed to get 1, 2, 3, 4, 5, 6, 7 positions. 7 positions away on that initial open. Just post that. That was good. So that was 20, 30, 40, 50, 60, 70, about $100. Yay. So not bad for 18 seconds. And that was an easy one to follow because there we go, the market did indeed sell off. Oof. Of course, now it's you need to wait for the next move, which can be a retracement or more continuation of the sell. But that was a good one. So that's took us to 31% for the day. So brilliant. Well happy with that. Move that out of the way now. Don't need that. Still pushing down. Just getting some more trades. Yay, there we go. That's my second batch done. Got in on that drop there. And we got another 5 trades away, in and out, and again we got another about another $20, $25 there. It reached the outside the band, so I'm cautious we're going to get some kind of pullback. You see, it could retest and drop more. We've got our level down here, look, as you can see. But like I said, I just do like to do 2 batches of trades, 2 batches of scalpings on the open, get in and out, and then that's it. Sit on your hands and wait for the bigger move and not give the market back any of the profit. So that was it. So that was really good, nice and easy open. And we managed to take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 positions in the end, and all done. Two minutes and that's all you want. Don't want to be hanging around, you've got a life. That's the whole idea behind true scalping. As soon as I saw that move, that was it. It was a forceful move. You could see the candle, it's bigger than all the other candles. It was going to go down, and usually it goes down again. And on the 5, you can see we've got a level of support here. We've got that demand zone which we're approaching. Yeah, we could go back in again and risk it, but again, once you've taken the money, there's no need to be like that. Yeah, especially like I say, when I'm 33% up for the day on the account, that's more than enough. Most people don't get that in a year. So and now if we're touching the outside and waiting for a pullback, I need the momentum to be higher, and we want a pullback inside. And again, where's your TP likely to be? Well, if it was like now, you just go below that. As you can see, look, there's the push up now, look. See, if you continued that sell, you'd be, you know, really anxious now. All this manipulation bouncing off the bottom. Still think price is going to get down to that demand zone. So we'll set that, and then we'll have a look at cable for later. We'll post this with the team, And again, it's ranging nicely, and we've still got a potential of, yeah, easy. So we've got 10 pips easy. We want to do like 37, 30, 35, 36, 37 pips. And again, what you want to do is, if you're going to leave a trade running like this, then obviously you just set your, say we're going to take a long, which is what we want to do. So it was from that candle there. Then obviously you just want to be just below the outside the bands, outside the last swing low, swing high, sorry, and then TP either at the bands, TP1, TP2, and if you're going for it, TP3 back there. So that's kind of the setup I'm looking for. So I'll leave that on there, because we're not taking the trade for another 25 minutes yet anyway, so we'll see where price ends up on that one. Just going to post that into the group. Brilliant. And what we'll do, like I say, we're going to be back later on for the minutes at 7. We'll be back trading gold on that. So that's it. You know, nice little news event, nice little open, 30%, job done. That's all we need to know. And as you can see, look, it hit that TP, it's pulling back. Here's your manipulation. Look at this. Beautiful, beautiful. Buy signal as well. Going to push up. So as soon as I've been watching that buy signal, I'd have gone in on that 100%. We've had a cross inside the neutral zone. Yes, the big trend is still to the downside. This is a nice little tasty pullback, and we could have got in on that trade. That should have been one from here. We should have been about there. Just getting that 10, but there's 400 pips there, look. But again, if you go into the outside the bands with it, so that's where you should have gone in on that one. We didn't need to, like I say. But that's it, and we set repeat, and we go again tomorrow. And tomorrow there's more news events. See, look, it's hit that TP. There you go, bang, hit that, and look at it. Look what it happens to be. It happens to be the 500 on the Fibonacci. Bang, there you go. Look at that. It's amazing when you sync the two together. It's so powerful. You wonder why things reverse back. You don't need to go crazy high on the time frame. Just 1 and 5. And that's it. And now we're going to get a pullback or break above. So this is a nice little pullback now. And like I say, where's price heading? Well, it's heading all the way back to where we started before the PPI there. So that's where price wants to get back to. When you can see it and figure it all out, it's amazing. That's where it wants to head back to. Brilliant. So answering a few questions, and that's it. So we've had that nice little move back up. You'll see the market either break and go back to the PPI or pull back for a little bit, so you can see where you're aiming to, and in the end, look, it's what I said. It was that nice little W, second leg going back to where the news was before it was announced, which the market always tries to do. Tries don't always succeed, but that'll be interesting to see if you stretched it to there, whether that's going to hit. If it breaks here, then that's where you want to be buying. Again, not financial advice, just my entertainment for you. And cable, we'll wait and see on that one as well. So thanks again for joining me. I love these little short live streams, just to show you haven't got to be sat at the computer for a long time trading. Just, you know, an hour to 90 minutes. You don't even have to do what I do. I'm doing this because I'm on YouTube, and just same again in the morning in London, and that's it, job done. And that's the whole idea about true scalping, is picking the right times to trade, the same things to trade, what news events to trade, and then close your laptop and finish. And that's it. That's the life of a true scalper. But thanks for following me again. Give me a like if you've watched this, and share please with everybody, and subscribe if you haven't, and you'll find out when I'm live next. And we'll catch you all hopefully for the minutes in the group, and we'll try and trade the Fed minutes later on gold. So until the next live stream, take care all and trade safe.